Now this right here is more or less every single dividend paying stock and ETF that I currently own as a 31-year-old investor. Now even though as you look through this portfolio and you might see some growth names or some stocks that are just technically more growth oriented, like my 1,000 shares of Apple stock, you're also going to find a ton of more income oriented, income generating assets. Like take my 2,700 shares of QYLD for example. Now at quick glance, if you look throughout this portfolio, you might be sort of surprised that this portfolio is what I've chosen to build as a 31-year-old investor that has a long time frame ahead of me, that has lots and lots of years of investing ahead. But that's absolutely not the case. This portfolio was built stock by stock, ETF by ETF for a deliberate reason and a strategy that I came up with around 7 years ago. Now in this video, we're going to talk about whether or not younger people should invest in higher yielding assets. And this is a perfect topic that I can actually talk about extensively because like I said, I'm currently 31 and I do own a portfolio that generates a ton of income on a monthly basis, and that's largely due to the fact that this portfolio is full of different higher income producing assets. So if you're currently a relatively younger investor interested in possibly building out a higher yielding portfolio to generate income a lot faster, stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So I have to say this first before anything else. There's no right or wrong strategy when it comes to investing. The only right strategy is a strategy that works for you specifically. Now, what I mean by that is, of course, on the internet, if you buy X or Y stock or ETF, you're going to have people on both sides saying that you're a genius, that stock or ETF is a great investment vehicle. And then, of course, you're going to have people on the other side that don't necessarily have the same strategy as you. And these people are probably going to rag on you or even call you an idiot. Trust me, it happens to me all the time. But the reality is simple. If you're building a portfolio with a strategy in mind, a strategy that you came up with that works well for you, then what you're building is going to be perfect long term. Now for me specifically, the strategy that I came up with several years ago when I first entered the stock market and bought my first few shares. I wanted to build a portfolio that not only paid me a significant amount of dividend income ongoingly, but I wanted to have a portfolio that also had the potential to move up in price over time. And on top of that, I wanted the portfolio to be made up of names that are relatively low beta. So now that you know exactly what my strategy is, looking throughout this portfolio of mine, it probably makes a lot more sense on exactly why I'm holding each and every one of these positions. Now, don't get me wrong, there's definitely some names in here, some stocks and ETFs that I wish I wouldn't have bought so many shares of maybe, and or I wish I wouldn't have bought in the first place. But overall, I can say that over the years, I've shaped and molded this portfolio to more or less the perfect portfolio that matches what I'm looking for and matches my strategy. Now, the question on if or if not it's worth investing into higher yielding stocks and ETFs as a younger investor, I personally think it's absolutely worth it. Now, with all my shares of all my stocks and ETFs as it sits currently, I generate more or less on average, of course, around $6,500 per month in dividends. Now this of course did not happen overnight. This is around 7 or 8 years now of buying stocks and ETFs every single day, using all of my active income, a business liquidity event, etc., reinvesting all of my dividends along the way. So before you say, well, maybe it only makes sense to invest in some higher yielding stuff for you because you had a little bit more money to work with off top, I still think that every single investor out there needs to ask themselves what they are solving for. And if you're an investor right now, let's say you only have a $5,000 portfolio, and even if with that portfolio you could buy some shares of Apple stock and maybe double or triple your portfolio in the next, say, 10 years or so. For some investors out there that have a strategy more closely aligned with my strategy, looking for more cash flow, it might make some sense to buy into some higher yielding names and generate some cash flow to maybe use the money a little bit sooner to pay for bills or other things. Now, this is one of the main arguments I have quite often with more growth style investors. A lot of growth investors tell me if I just sold off a ton of positions in this portfolio and instead invest into something like QQQ, they said that my portfolio would most likely grow a lot faster in a shorter amount of time, and that I'm basically wasting my time building out a portfolio that pays me cash flow in the first place. Now, the simple response that I would have to those people is that a growth portfolio and a dividend more cash flowing portfolio are two totally different strategies. Building out a growth portfolio, buying into names that have growth potential. Say once again something like Apple, for example. If I, for example, listened to that investor and sold a ton of equities back in December and bought a ton of Apple shares at $192 per share, because again, something like Apple has a very high beta. Well, since the time of me doing that, I potentially would not only be down around 5% on my overall investment for my portfolio, or at least for that position, but on top of that, because Apple pays such a tiny dividend, I would not be generating any significant cash flow to use for things like bills, vacations, or other things. So once again, my response is simple. Yes, maybe you can buy into something more growth oriented like Apple or like the Qs, and maybe potentially you could see your portfolio grow a lot faster than a portfolio made up of things like JETB, OHI, or SCHD. But for me specifically, because I am solving for something that that investor is not solving for, I'm solving for cash flow, I'm solving for dividends, because I'm looking to use my dividend income to potentially retire early, and if not, I want to use a ton of my dividend income in the future to go on vacations, help family and friends, or to buy things that I might not otherwise buy. So a lot of times when more growth-oriented investors come at me and try to criticize my portfolio and my strategy, I think they're trying to argue an argument that I'm not even necessarily having. But to go back to the original topic at hand, if a younger investor or relatively younger should or shouldn't invest in a higher yielding stock or ETF and sort of focus on cash flow or dividends, I personally think that if you are an investor out there and you're looking to solve for cash flow, if you're looking to get your passive income up to a certain point, like I said, maybe to cover your cell phone bill, maybe to cover your car insurance, or maybe over time you want to build up your dividend income to a point to where you're earning multiple thousands of dollars per month and be able to pay for everything in your entire life and then some, regardless of what the reason might be. If that's something that you're interested in, I personally do not think that there's a problem whatsoever for a younger investor to buy into higher yielding assets whatsoever. Now, I will say this, at least for my strategy. Again, every strategy can be different and that's fine. But for me specifically, I also do have other alternative assets that do have the potential to grow a lot more over time. Things like physical real estate, which I own. On top of that, I also do have my 1,000 shares of Apple. I have tons of different names in here that are not only going to hopefully potentially pay me more and more in dividends over time, but something like SCHD hopefully will also go up over time, raising my overall net worth and then some hopefully. But all in all, I think that buying into higher yielding stocks and ETFs can also unlock a ton of potential opportunity that investing into growth style ETFs and stocks can't. Once again, not necessarily saying that one is better than the other, just saying that there's multiple different strategies, and you have to understand and respect that every single investor has their own strategy and take that for what it's worth. That even means that some investors out there, including myself for this example, might be willing to cut off some overall total return if that means to get paid dividend income a little bit sooner. But the real answer is that there's not any right or wrong way to invest. Again, come up with a strategy that works for you, that solves for everything you're looking to solve for your investing journey, and stick with it. But now lastly, I want to hear from you guys down below. I want to know if you personally think it's potentially a good idea for younger investors to invest into higher yielding stocks or ETFs, or if you think because of the time frame and because of other things included, younger investors should only invest in growth-oriented stocks and ETFs. Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.